What is going on, you crazy animals? It's Stas here. Welcome back to another video. So we have another jam-packed week for the stock market ahead, which means we have 5 companies, 5 stocks to break down, all of which are reporting earnings this week. So we have to break down the charts, my thoughts, earnings estimates, EPS, revenue, and of course what I'm looking to do with these stocks. So guys, hit the like button, make sure to subscribe, and don't forget to get up to 20 stocks from Moomoo. Very important, with at least a $100 deposit. Simply use that link down below or go to StasSurfS.com/Moomoo, and your uninvested cash for a limited time will earn up to 8.1% APY. Guys, come on, that's a no-brainer. So again, use that link down below or go to StasSurfS.com/Moomoo. And with that being said, cheers. Let's dive right into the video. So again, jam-packed week coming up for the stock market, not necessarily for economic data or CPI or anything like that, although we do have the unemployment claims, which everybody and their grandma has been keeping an eye on, considering, that number 2 weeks ago came in better than expected, and last week, for that matter, it did as well, which caused the markets in general to move up a bit higher, which is good in the short term. And am I off-centered here, guys? My OCD's kicking in. There we go. Okay, that looks a little bit better. All right. So, yeah, other than the unemployment claims, at least to my knowledge, maybe I'm forgetting something, but I'm not seeing anything else super important economic data-wise coming out. But we do have, like I said, 5 companies, important companies, reporting earnings. And this is as the entire stock market is at a very big resistance. The S&P, looking at SPY, is battling at the highs from early August at about 555, and Triple Q is battling at about, let me see here, guys, about 475 roughly, right? So these points heading into this week, if you're a bull especially, obviously, right, need to break. These points need to break, and if they do, hey, more upside could ensue from there. But for now, we're actually struggling to break out of the highs from August, so keep that in mind. Early August, that is. So with that being said, guys, let's dive into the stocks. Number 1, we have Palo Alto Networks, right? PANW is the ticker, and this stock has actually done very well in just the past week or two. It's up from 282 on the low to about 345. It looks like it hit this past Thursday. That was a 22% move. And then on Friday, it saw a little bit of a pullback, but we're still looking pretty good here on the charts. And on the 4-hour time frame, you guys can see, we're at right now a big level of resistance at about $345 per share, which is actually where we struggled. Looks like end of June, all throughout July pretty much, and on Thursday and Friday of this past week, right? So we got rejected at 345, but we're still holding an uptrend. We're still holding higher lows, as you guys can see, which leads me to believe that, well, we have an ascending triangle heading into earnings, which is actually a pretty bullish pattern overall. And if we do end up taking out 345, let me set my alert there right now. Mark is at or above 345. There we go. If we do take that out, boom, we have a wide open gap to fill right here up towards 380, man, 375, 380. That's where we could be going on this thing. So Palo Alto Networks, they're on, I think, Tuesday. Let me double check that, though. The 19th after the bell, which is actually on Monday. Wait a second. Monday, the 19th after the bell is when Palo Alto Networks is reporting. And EPS, I can't forget the estimates here, guys. EPS is $1.41 versus $1.44. That's the estimate from last year. Looks like here, or wait, that was the actual number from last year. The estimate's $1.41. And for revenue, $2.16 billion versus $1.95 billion from last year. They're projected to grow revenues by about 10-11% year over year. And again, I'm telling you guys, 345, that's a big spot. We break out of there, boom, we could fill the gap up to 370, 380 in that ballpark is where we could be going. So that's Palo Alto Networks. We also have Lowe's this week. We just got Home Depot about a week or two ago. Now we're going to get Lowe's. They're, I believe, on Wednesday. I feel like they always report on Wednesday, right? No, they're on Tuesday in the morning. Okay, Tuesday the 20th of August. So we have Lowe's pretty much approaching a big resistance right now at about 245, 250. You guys can see buyers did come in at around, let's see here, 225, 230, which was resistance for quite some time. So buyers came in there as support, which is good. Now we're getting the pop to over 240. And look, 245, like I said, if we're able to get out of there, man, Lowe's could end up filling the gap potentially to 260. Maybe it even goes higher than that. So Lowe's EPS projected is $3.97. Yeah, $3.97 versus $4.56 from last year. So EPS is compressing on Lowe's as revenues projected at $23.91 billion. And full disclosure, guys, I don't own Lowe's or Palo Alto for that matter, but I am planning on potentially trading these things. Like I said, Lowe's breaks 245. Let's put my alert at 246 for now. We might rip out of there and fill the gap to 260, 265, of course, depending on earnings. So alert set, 246 on Lowe's. The next one here is Target, ticker symbol TGT, which was on an absolute heater in the first couple of months of the year. I'm not sure if you guys saw it, but Target started off the year at about like 135, 40 bucks per share. Then we hit 180 by the beginning of April, and now we're back at 140. We've downtrended for the last couple of months. You guys can see here we're in a downwards channel, pretty obvious, right? Now we're at the top of that, testing a big resistance. So their earnings are coming up on probably Wednesday. Let me double check that. Yeah, Wednesday in the morning, the 21st of August, we're getting their numbers. And guys, if we get out of this channel at some point, we're very beaten down heading into earnings. Maybe earnings cause it to break out. We get out of here, there could be more upside on Target, potentially. It comes down to earnings. It comes down to earnings, right? They're looking to do EPS of $2.19 versus $1.80 from last year on revenue of $25.22 billion. So I'm going to set my alert at $150 per share on Target. Let's see if we get a reversal out of that point. If we do, hey, more upside could be right around the corner, especially if we get out of this resistance, 150 to 155. We kind of struggled there in the end of May, all throughout June, into July, almost into August. So keep your eyes on 150 to 155 on Target. And by the way, guys, I started an email list. I'm sending you guys for free my top 3 stocks every single Monday morning right to your email. And we have 400 people. Again, this is free. 400 people that have already signed up, and they're enjoying the emails I'm sending every single week. No fluff, no spam, no BS, just straight up stocks and charts right to your email every Monday morning. All you guys have to do is put your first name and your email address right down below. I appreciate you all for signing up. Again, it's free. So stock number 4 is Snowflake. And the interesting thing about Snowflake is the fact that Buffett was in this thing pre-IPO, and now he's completely out of it. We saw the 13F filing. Now Buffett's completely out of Snowflake, and this stock has been just battered, man. Ever since they reported their last 2 quarters, it has not been good for Snowflake. I mean, look, in February, it looks like early March when they reported, the stock went from 235 down to about 175. Then it stayed pretty flat for a couple months. Then it reported again. So essentially, early in the year, they reported, tanked, right? Stock consolidated until the next earnings report. We got the next earnings report back in May, and boom, we tanked yet again. We went down to about 125, then we rallied to 145. Now we're back to 128. We hit 107 about a week or two ago. So Snowflake stock is suffering right now. People are dumping it. Buffett in specific, right? In particular, he's dumping it. And now the stock is at an all-time low. It seems like it just hit. By the way, guys, they just IPO'd a couple years ago. Nothing crazy, not too long ago. And they hit 430 originally when the stock first was in the markets, public markets. It was hot, right? Hit 430. Now we're at 128. Talk about a turn of events for Snowflake. So earnings per share, $16 versus 22 cents from last year on revenue of $851 million. That's the projection as of right now. So Snowflake earnings are on Wednesday the 21st after the bell. They're going to have to start turning things around. They're going to have to report a good quarter, strong guidance, something to get this stock out of the slump, because, man, it's cut in half pretty much over the course of the last couple of months, and we're still in a downtrend. We're not looking pretty here at all. So Intuit, last stock for the video. Intuit, ticker symbol INTU. It's been battling at this resistance all year at about $670, $675 per share. Literally all year, we've been struggling to break out of there, right? And we're heading into this earnings report, testing that resistance. We're pretty much pushing into it as well right now. And they're reporting earnings on the 22nd, which is on Thursday after the bell. So keep your eyes on Intuit. If it's able to potentially get out of 675, this could be a huge breakout play, probably to all-time highs. I'm assuming 675 is the all-time high here on Intuit. Let me double check that though. Actually, no, it's not. 715 is from back in 2021. So maybe we break 675. We go to 715. Maybe from there, all-time high. I don't know. But this quarter, a lot's riding on it. EPS is projected at $1.84 versus $1.65 from last year on revenue of $3.08 billion versus $2.71 billion from last year. That's going to be up around 13-14% year over year. So Intuit, very interesting company, guys. I use some of their products, love their products, and I'm curious to see if we're able to get out of this resistance. 675 is a big spot. That's where my alert's at, and if we do, I'll be able to trade this thing and, maybe make some money. And by the way, full disclosure, I'm not long as of now any of these stocks, but I'm considering them as, again, they're all reporting earnings this week. So what do you guys think? Let me know your thoughts in the comments down below. Hit that like button. Don't forget to subscribe. We're trying to get the 50,000 subs here on YouTube, and you might as well get up to 20 stocks for Moomoo with at least a $100 deposit. Simply use that link down below or go to stocksurfest.com/Moomoo, and your uninvested cash will earn up to 8.1% APY. Guys, that's a no-brainer. So again, use that link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next video.